I see people saying the Taylor rule says we should be at 10%. The Taylor rule says 9%. What does Taylor say the Taylor rule says policy should be right now?
Well, it really depends on what you think the inflation rate is. If you put the inflation rate into 4%, that's kind of mild. It says 6%. 6% is where it should be. So I'd like the Fed to get to that point and then 6%. See what's next.
But let's rewind for a second, because the reason they don't like the Taylor rule is they say it's just a set of calculations. It's too hard and fast. So how can we be talking about different outcomes? This sounds like this is more flexible.
Well, it's not so flexible. First of all, it depends on what you think the inflation rate is, and there's debate about that. Is it coming down? Is it steady? And that's an issue. So I'm assuming inflation rate is 4. That's pretty mild in some sense to get to 6. But it's a very simple formula. It's been around 30 years. That's a long time, and the Fed has used it from time to time. They all know about it, and I think they're getting back. What is most concerning is for a whole year they were way below, right. 0.5%. And they're getting back. I wish they go back a little faster. It would be safer. You don't want to have the replay of the 70s.
I want to remind people, we should have grabbed the soundbite, Professor. You were on our show about a year ago, said we should be at 5%, and everyone, oh, that's crazy. Well, guess what? That's not sounding crazy at all. Steve?
John, I think you cut yourself off there for a second, and I'm going to finish the thought. You said they're getting back. Did you mean they're getting back to following a Taylor rule more closely? Would that have completed your sentence there?
Yeah, I think that's one way to think about it. They have different views, different perspectives. Most of them, but they are getting closer. 4.5, 4 3/4 is closer to 6 or 7. And I think, given the inflation rate has not really come down a lot, there's debates about that. The last numbers weren't so great. You got to still move a little bit higher, and I think that's what I would favor they do. And by the way, you have to mention there's other countries. It's not just the Fed; it's a global issue. The ECB is even further behind.
John, maybe the one thing I could add to this is to talk about how the Fed thinks about the Taylor rule, and you can, of course, correct me if I'm wrong here, but I want to concur with your opinion here, which is that when I hear Fed officials talking about the 4.4, 4.5, 4.56 area, it comports with somewhat different versions of the Taylor rule that are out there. The Cleveland Fed actually publishes 27 different versions of the Taylor rule.
Wow.
There are 7 different rules times, it's 21. 7 different rules times 3 different forecasts.
Everyone says it's
the forecasts are key. But what I do hear, John, and I think even though they say they don't want to follow a rule precisely, it seems to me more and more like they're hewing to this idea of this 5.5 to 6 range, which is supported in a lot of different Taylor rules. You think that's right?
I think that's right. I think that, by the way, the Fed has published the Taylor rule that's in their report now. They put it back in June 17, 2022, and it's there, and it went out, went in, went out. Now it's back in again. So they pay attention to it. They're paying more attention at this point now. But I would say let's get to 6. Maybe it's a little bit further, but let's get to that point. We've got a ways to go. I don't think it should be delayed too much, and then see what happens. I think you might have to go higher, but I don't know yet. And there are different versions. Depends on what the inflation rate is, depends on what GDP gap is, and also things like that. There's only 2 variables, by the way: GDP gap and inflation. And there's also the debate about what should the equilibrium inflation rate be. John Williams contributed to that discussion before. It knocked it down from 2 to 1. And so that takes a couple points off.
John, one of the interesting features of the market today and its outlook on the Fed is the idea that it believes that beginning next year it will begin to cut. And I don't know, guys, if you have that long-range chart that shows the Fed funds futures in 2025 coming down by about 130 basis points once peaking at a 540 rate. What do you think about that? What does the Taylor rule tell us about whether or not the market has that forecast correct?
It depends on what they think of the inflation rate. If the inflation rate stays high, they're going to have to keep it high. I think that the danger is cutting too fast. And I think that's what you're seeing a little bit this side. They're optimistic inflation will come down. Maybe it will, but we have to wait to see it comes down. That's the whole notion of a rule. That's the whole notion of a policy strategy, whether you call it a rule or not, that the Fed seems to be paying attention to more now than they were before.
You mentioned your rule. It takes into account both inflation expectations, but also the GDP gap. What is the GDP gap right now?
It's nearly 0. It's really, we're basically, based on the unemployment rate, a very low unemployment rate. So I would just put that aside. Makes it easier. Is the debate about what the gap should be. I put that aside and focus on the inflation rate, which is still quite high.
Yeah,
and, John, should we put it aside? I've been thinking a lot about the labor force and how Chair Powell has said. I was going to say Chair Taylor. perfectly possible. But Chair Powell has said he doesn't see the workforce coming back to what it was before. If we have a lower labor force growth, we're going to have lower GDP, and that means that the output gap is what? It's negative. We're running too hot right now in terms of the economy.
Well, what you want to do, the unemployment rate and the GDP gap are kind of measuring the same thing. You have to put them on track. In the Taylor rule, we used the GDP gap, and there's unemployment versions of that. And so I think that as long as they're in sync and there's debates about what the full employment unemployment rate is, or debates about what potential GDP is, it always makes it hard to calculate.
That's what I'm talking about, yeah.